Quality decay.
Before we start, if you've ever paid for insurance and thought, "At least I'm protected," you need to watch this. And if you want more content that exposes how everyday systems really work, subscribe and leave a like, because this one might change how you see insurance forever. Now let's talk about something almost everyone pays for, but very few truly understand. Insurance. Car insurance, health insurance, home insurance, travel insurance. We're told it's protection, we're told it's safety, we're told it's peace of mind. But here's the uncomfortable truth. Many people only discover how insurance really works when they actually need it. And that's when things start to go wrong. Claims get delayed, payments get reduced, coverage gets denied, and suddenly the protection you've been paying for doesn't feel so reliable anymore. So what's really going on? Is insurance a scam? Not exactly. But the system is designed in a way that doesn't always work in your favor. Let's break it down. At its core, insurance is simple. You pay a company regularly, monthly or yearly, and in return, they promise to cover certain costs. If something goes wrong, it sounds fair. But behind that simple idea is a complex system built around one key goal: profit. Insurance companies are businesses, and like any business, they make money when they collect more than they pay out. That means their success depends on a delicate balance. Collect as many premiums as possible. Pay out as little as necessary. Now, to be clear, insurance does pay claims. Millions of people receive payouts every year. But the system is carefully structured to control how much gets paid, when, and to whom. And this is where things get complicated. Let's talk about policies. Most people don't actually read their insurance policy in detail. And even if they try, it's not easy. Pages of legal language, technical terms, conditions, exclusions, limitations. It's overwhelming. So people do what's natural. They trust the summary. They assume they're covered. But the real rules are buried in the fine print. And that fine print matters. A lot. For example, many policies include exclusions. Specific situations where coverage does not apply. Sometimes these exclusions are obvious. Other times, not so much. Water damage might be covered in one scenario, but not another. Health treatments may be included, but only under certain conditions. Car insurance might cover accidents, but exclude specific types of damage. So when something goes wrong, the first thing the company does is check, does this situation fall within the exact terms of the policy? If not, the claim can be denied. Then there are deductibles. This is the amount you have to pay out of pocket before insurance kicks in. It sounds reasonable until you realize how it affects real situations. If your deductible is high, many smaller claims aren't even worth filing. You end up paying yourself. Meanwhile, you're still paying premiums every month. Another important concept is claim evaluation. When you file a claim, the insurance company doesn't just accept it at face value. They investigate. They assess damage. They verify details. They look for inconsistencies. And sometimes they reduce the payout based on their assessment. This isn't always unfair, but it often surprises people, because the payout may be less than expected. Now let's talk about delays. Insurance claims can take time, sometimes weeks, sometimes months. During that time, you may need repairs, medical care, or replacement costs. And you're left waiting. This delay isn't always intentional. but it does benefit the company, because the longer the process, the more pressure builds on the person making the claim. Some people accept lower settlements just to move on. Then there's something called risk calculation. Insurance companies use data, statistics, and algorithms to estimate risk. Based on your age, location, history, behavior, even small details, they calculate how likely you are to make a claim. This determines your premium. But it also means something important. The system is designed to be mathematically favorable for the company. Over time, across many customers, the company expects to make a profit. That's built into the model. Now here's where things get interesting. Many people think insurance is there to fully protect them. But in reality, it's designed to manage risk, not eliminate it. That's a big difference. It means coverage often has limits, maximum payouts, specific conditions, restricted scenarios. So even when insurance works, it may not cover everything. Let's look at a real-world example. Imagine you have home insurance. A pipe bursts and causes water damage. You file a claim. But then the company asks, was the damage sudden or gradual? Was maintenance performed properly? Is this type of damage covered under your policy? Depending on the answers, the outcome can change dramatically. Even though, from your perspective, it's simply water damage. Another factor is policy complexity. Modern insurance products are more complex than ever. Bundles, add-ons, optional coverage, tiered plans. This gives flexibility, but also creates confusion. People think they are covered for something when they're not. And that misunderstanding only becomes clear at the worst possible moment. So, is this all intentional? Not always in a malicious way. But the system is optimized for efficiency, risk control, and profitability. And that creates friction, especially when expectations don't match reality. So what can you actually do? First, understand your policy, not just the summary. Look at key sections: exclusions, deductibles, coverage limits. Second, ask questions before buying. What exactly is covered? What is not? In what situations could a claim be denied? Third, document everything: photos, receipts, records. If something happens, documentation can make a huge difference. Fourth, don't assume. Just because something seems obvious doesn't mean it's covered. And finally, think of insurance as a safety net, not a guarantee. It reduces risk, but it doesn't remove it. In the end, insurance isn't a simple yes or no system. It's a structured agreement with conditions. And those conditions matter more than most people realize. So the next time you pay your insurance bill and think, I'm covered, remember, you might be covered, but only under the right conditions. If you found this useful and want more breakdowns like this, the kind that reveal how everyday systems actually work, subscribe and leave a like. Because understanding these things before something goes wrong can save you more than money. It can save you from a very expensive surprise. Thanks for watching.